Yep.
I did want to just get your take on the broader AI picture. I mean, the amount of money that is being committed by OpenAI, for example, is what we've been talking about, to companies, and just the enormity of this capital. I don't know if you've ever seen anything like it in your career, and I'm curious as to how you view it and whether you think that those who use the word bubble are correct in that usage.
Well, there's a bubble in investing, but are we inferring a bubble means a bad thing? But there is certainly a skyrocketing amount of capital that's being put to work. If you put it in a framework of geopolitical positioning, we as a country need these investments if we're going to be the leader in AI technology. So as an American, I'm pretty happy that we're investing this much money. I want us to be first. So let's start there. Does that mean, is there going to be some failures within the confines of these investments? Absolutely. But I do believe we are going to have to invest these huge sums of money. If you think about it, investing in AI does not just mean investing in GPUs and chips. It means investing in HVAC and investing in power grids and power supplies. It means employing a lot of people, too, to build this out. So we are talking $1.5 trillion, we estimate, just on data centers and power and all that. But if you see the rapid need in advance, I could say at BlackRock, the amount of information that we are trying to generate ourselves and the speed in which we want to generate, we're spending more and more on it, and we're getting good results on it. I believe every major company is going to have to be spending more and more on this. I think some of the investments that we've seen so far is not on AI, it's more on cloud and the power of the cloud. So I do believe this is, I don't believe this is a bubble, but I believe this is capital that in most cases is going to be well spent. That being said, will there be one or two failures in that? Absolutely. And that is capitalism. We're going to have some big winners and we're going to have some big losers. And obviously we have to, but if you have a diversified portfolio, you're going to be fine and all that. And if you're a stock picker, you better be picking the right ones. I'm pretty constructive on our big hyperscalers, though. And I do believe the Metas, the Alphabets, the Microsofts are in really good position to be winners. And you're seeing the transformation out of Oracle and what they're doing and how Larry is trying to transform it. Broadcom, what Hoxton is trying to do. I actually am proud of the U.S. footprint in this, and I do believe we're going to need to spend this money to win on a geopolitical basis.
As the growth of AI infrastructure continues, Macquarie Asset Management said on Wednesday that it will sell aligned data centers to a consortium of investors, including BlackRock and Nvidia, for $40 billion. As businesses scramble to create complex AI models, the agreement highlights a growing competition to extend the expensive, supply-constrained infrastructure needed to develop AI technology. The purchase comes after a series of massive agreements aimed at obtaining sought-after computing power. In recent weeks, OpenAI, the company behind ChatGPT, has announced deals totaling around 26 gigawatts of computer capacity, enough to power almost 20 million households in the United States. The Artificial Intelligence Infrastructure Partnership, AIP, is an investment partnership that aims to deploy $30 billion in equity capital initially, with the potential to exceed $100 billion including debt. The deal is anticipated to finalize in the first half of 2026 and is AIP's first investment. This investment in aligned data centers advances our objective of providing the infrastructure required to drive the future of artificial intelligence, stated Larry Fink, chairman of AIP and CEO of BlackRock. Microsoft and xAI are also anchor investors in AIP, in addition to the Kuwait Investment Authority and Temasek, the state-owned investor in Singapore. Aligned creates, constructs, and manages data centers for companies, neoclouds, and hyperscalers. Across the United States and Latin America, its portfolio consists of 50 campuses and over 5 gigawatts of planned and operational capacity, including assets in development. Andrew Schaap will continue to serve as CEO of Aligned, which will continue to have its headquarters in Dallas, Texas. One of the biggest private money infusions into a data center company was Aligned's $12 billion fundraise earlier this year. However, the amount of funding needed to meet demand is only increasing. Large tech firms, startups, private equity firms, and infrastructure funds have all contributed hundreds of billions of dollars to the capital-intensive project of growing AI infrastructure. Days after revealing that Nvidia intends to invest up to $100 billion in the business and supply it with data center systems with at least 10 gigawatts of capacity, OpenAI announced last week that it has reached an agreement with AMD for the sale of 6 gigawatt AI chips, which includes an option to purchase a share in the chipmaker. According to Morgan Stanley, major cloud providers like Microsoft, CoreWeave, Amazon.com, Meta, and Alphabet are expected to invest $400 billion on AI infrastructure this year. Big Tech has promised to increase data center capacity despite investor concerns about returns from these large expenditures. Additionally, concerns about the market's circularity have been highlighted by a recent surge in linked investments in the AI sector. Nvidia dominates the graphics processor business and is one of the largest providers to the market. It is also one of the major investors in recent AI agreements. After HSBC raised the semiconductor giant stock to buy from hold on Wednesday, citing ongoing growth in artificial intelligence, AI, demand, and an expanding total addressable market for graphics processing units, GPUs, Nvidia received new backing from Wall Street. Additionally, the firm increased its price target for Nvidia shares from $200 to a street high of $320, suggesting a potential upside of around 78% from the stock's most recent finish of $180.03. By far the most valuable semiconductor firm in the world, Nvidia would be valued at around $8 trillion under the new AIM, compared to its current market valuation of roughly $4.37 trillion. Following the upgrade, Nvidia's stock increased 2.7% in pre-market trade, continuing its 34% year-to-date rise. HSBC points to China's recovering demand and the growing AI chip market. The AI GPU total addressable market, TAM, is anticipated to go beyond conventional hyperscale cloud providers, enabling continuous earnings growth over the coming years, according to a note sent to clients by HSBC analyst Frank Lee. Given the widespread use of generative AI technologies and Nvidia's continued dominance in AI chip sales, Lee predicted opportunity for a sizable increase in FY27E earnings. The brokerage also voiced hope that trade relations between the US and China may improve, which might lead to a relaxation of export restrictions on sophisticated chips. With the possible US-China trade agreement, we see potential easing of China GPU uncertainties, which could allow Nvidia to see a recovery in demand in the Chinese market, Lee added. With its GPUs, which power models created by companies like OpenAI, Anthropic, and xAI, Nvidia has been at the epicenter of the AI hardware explosion. The market for AI GPUs is expanding quickly beyond hyperscalers, according to the analyst, showing robust demand from the enterprise, research, and edge computing sectors. The upgrade from HSBC strengthens the already strong bullish view about Nvidia. More than 90% of analysts who cover the stock give it a buy rating, compared to less than 8% who have a neutral rating and just 1% who suggests selling, according to data provided by Bloomberg. Based on the most recent close, the average price objective of the 66 analysts that LSEG tracks is $214.50, suggesting a potential return of more than 20%. The most recent bullish forecast comes after Nvidia took part in a significant infrastructure transaction. Along with BlackRock, Microsoft, and xAI, the company is a part of an investment consortium that agreed to pay $40 billion to acquire aligned data centers, demonstrating its expanding impact beyond chip design into the larger AI infrastructure ecosystem. After ASML Holding NV reported third-quarter orders and operating income beyond market estimates, Nvidia's gains were accompanied by strength in the semiconductor industry as a whole. Advanced Micro Devices Inc., AMD, and other U.S. chipmakers saw increases in their stock prices. HSBC raised its price objective for AMD from $185, another street record, to $310 and reiterated its buy rating. Lee claimed that AMD's recent alliance with OpenAI improves visibility and presents a more positive image for the business, adding that pricing premiums and increased AI GPU volumes may spur additional growth. In pre-market trading, AMD shares increased 2.6%, continuing their 35% October rise and increasing their year-to-date gains to more than 80%. The idea that Nvidia and its peers remain at the center of one of the most potent development cycles in the technology sector is reinforced by HSBC's bullish stance, given the acceleration of AI investment worldwide, and the lack of signs of slowing demand for high-performance chips. The hardware revolution in artificial intelligence, AI, is centered on Nvidia and AMD. Both are major participants in the semiconductor industry, directly competing in the fields of graphics processing units, GPUs, AI accelerators, and high-performance computing. Despite their strong commitment to enabling the next generation of AI computing, investors may be wondering whether stock is currently the better investment. To discover out, let's examine their valuations, growth drivers, and fundamentals. With its GPUs powering everything from cloud data centers to self-driving cars, Nvidia continues to be the backbone of the AI revolution. The company's dominance in the AI infrastructure market is fueled by the growing demand from businesses and cloud providers. Nvidia's data center revenues jumped 56% year-over-year to $41.1 billion in the second quarter of fiscal 2026, demonstrating the strength of its core business. As consumers scramble to increase AI capabilities, the company's two GPU architectures, Hopper 200 and Blackwell, are gaining traction quickly. As the competition for AI hardware heats up, Nvidia's dominance may be further solidified with the impending Blackwell Ultra and Vera Rubin platforms. In August 2025, Nvidia also obtained permission from the U.S. government to sell its H20 chips in China under a revenue-sharing agreement, in which it gives the U.S. government 15% of Chinese H20 sales. This action aids Nvidia in regaining market share in China, which formerly accounted for over 20% of its sales, but has recently decreased as a result of export restrictions. One important source of income might stabilize if this access is restored. Long-term demand for Nvidia's GPUs is also anticipated to increase as a result of the company's growing cooperation with OpenAI, which includes building enormous AI data centers that are powered by Nvidia systems. When taken as a whole, these advancements strengthen Nvidia's position as the world's leading supplier of AI chips. In the ecosystem of AI chips, Advanced Micro Devices has gone from being an underdog to a formidable rival. With significant advancements in both hardware and software, its expanding presence includes GPUs, CPUs, networking, and AI accelerators. The newest Instinct MI35DX and MI355X GPUs from Advanced Micro Devices, which are built on the CDNA4 architecture, promise outstanding performance and low power consumption. AMD is more competitive because to the support for well-known models like Llama and DeepSeek in its open-source ROCm 7.0 AI software platform. Among the strategic acquisitions that have assisted Advanced Micro Devices in expanding its AI capabilities are Nod AI, Mipsology, Silo AI, Lamini, and Brium. With the help of growing demand from cloud hyperscalers and independent AI initiatives, the company anticipates that its future Helios GPUs and updated ROCm versions will propel further growth in 2026. The data center division of Advanced Micro Devices, which offers AI technology, has been a major growth driver. The segment's revenues increased 14.3% year-over-year to $3.24 billion in the second quarter of 2025, accounting for 42.2% of total sales. Its recent agreements with Oracle and OpenAI are expected to increase demand for its data center solutions. Advanced Micro Devices will implement 50,000 MI450 GPUs for Oracle's AI supercluster and 6 gigawatts of Instinct GPUs for OpenAI as part of these agreements. These collaborations show how AMD is becoming more and more important in large-scale AI infrastructure. The increasing demand for AI chips will help both businesses, but Nvidia's growth profile seems more promising in the short run. Nvidia's current fiscal year 2026 revenues and earnings per share, EPS, are expected to increase by 56.9% and 48.8% respectively, year-over-year, according to the consensus estimate. Advanced Micro Devices, on the other hand, projects a more moderate 27.6% sales growth and an 18.7% EPS gain in 2025. Even if AMD's future looks bright, Nvidia still commands a bigger portion of the market for AI hardware, especially from business and hyperscaler clients that are making significant investments in generative AI infrastructure. The stock of Advanced Micro Devices has risen 80.5% so far this year, outpacing Nvidia's gain of 34.7%. Optimism following AMD's high-profile partnerships and new AI processor launches is reflected in this rise. However, the shares of advanced micro devices are now comparatively costly due to the significant price increase. AMD is currently trading at a price-to-earnings ratio of 39.49 for the next 12 months, which is significantly higher than Nvidia's 31.69. The value discrepancy implies AMD has less potential for growth given Nvidia's quicker rate of expansion. Even though advanced micro devices is a strong competitor due to its quick development and growing alliances, Nvidia is still the industry leader in AI hardware. In the current AI chip competition, Nvidia is a better investment option due to its greater product selection, unrivaled software ecosystem, stronger growth potential, and comparatively lower value. Don't forget to share your thoughts and experiences in the comments below. Your input helps create a more knowledgeable community where we can all learn and grow together in the world of investing. Stay up to date with the latest market trends, insights, and key updates by subscribing to Investing Tutorial. We're here to help you make smarter investment decisions and stay ahead of the curve.
Nvidia, a big price target hike, and let's talk about that. Good morning, Diane.
Yes, good morning. Yeah, it's not all about the banks today. And listen, the tech sector has been a big part of what's led this market to record after record after record. So Nvidia has got another bull behind it today. This time it's HSBC who's upgrading its view on Nvidia. They've upgraded it to a buy from a hold. They've come off the sidelines and joined the largely bullish sell-side community because, in fact, more than 90% of analysts who cover Nvidia have a buy rating on it. And not only are they coming from the sidelines, they're lifting it to a high on the street. Their price target is now $320. So they see even more upside from here, more upside from the gains that you're seeing today because Nvidia today is sitting at 183, just above that. So they're seeing, again, more strength to come. They say part of that is just the growth engine that's happening at Nvidia. Because of AI chip demand, they think it's expanding beyond just the big hyperscalers like Amazon, like Microsoft, like Alphabet, Google. They see, quote, significant earnings upside for Nvidia by fiscal 2027, projecting $8.75 per share in earnings. That's higher than Wall Street's consensus. Wall Street's consensus is $6.48. Again, the core driver is still data center demand. They point to Nvidia's big order and that wafer order at TSMC. They think that's obviously critical for the high performance AI GPUs. Also, another thing happening around Nvidia, you've got some big AI investment that's just underscoring the AI boom that we've been watching in this space. Nvidia joining forces with BlackRock, Microsoft, and xAI in this new $40 billion deal to acquire aligned data centers. It's part, of course, this broader AI arms race that we've been watching. And this time, you know, where you see different individual or companies that you could potentially even see as competitors, but this is the case where they're trying to expand the infrastructure that's needed to power AI.